How to proceed if you have free money in your account for long-term investment. How to choose suitable stocks and decide within 5 minutes whether to buy them or not. That's exactly what today's video is about. A stock in sector ETF, return on equity, debt to ratio, net profit margin, dividend yield, performance evaluation. To be able to analyze stocks, I made a simple spreadsheet for this. I enter values from publicly available sources and then decide whether or not to buy the company's stock. In today's video, I'll focus on the healthcare sector and AbbVie stock with the ticker ABBV. If you were to analyze a stock in the technology sector, for example, in a similar way, you would need to adjust the parameters. I like to focus on 10 years trends the most, which allows me to eliminate dips and rises in the markets. Of course, it depends on the time I'm evaluating the stock. A 10-year view gives me the necessary perspective and eliminates the outliers. Let's go to the detailed process. Is the stock part of sector ETF? Via finance.yahoo.com I look at the XLV ETF for the holdings entry. Is ABBV stock one of the 10 largest stocks in the ETF? Yes, that's good news. I'll enter it in the spreadsheet and move on. As you can see, ABBV is represented in the ETF at number 5 after Eli Lilly, United Health Group, Johnson & Johnson and Merck. That might be a good start, as it tells me that this is a significant company and its representation in the ETF has a 5.53% weight. I list the sectors for completeness, between which all the stocks in the market can be divided. They are technology, financials, real estate, energy, materials, consumer discretionary and others. Return on equity (ROE) is another one of the metrics I track. It expresses how efficiently a company uses its capital to generate profits. A higher ROE indicates better efficiency of capital utilization and profitability, which may indicate long-term sustainability and a competitive advantage over other companies. Looking at ABBV, the return on equity average is around 135%. That is, it generates $1.35 of profit for every dollar of equity. This indicates efficient use of capital, high return to shareholders, and many times exceeds my requirement of ROE greater than 12%. Debt to ratio can express to me the company's financing activity and how much risk it carries in relation to debt. The lower the ratio, the less debt the company has and is considered more financially stable. Expressed as a number where 1 means that the company has as much debt as equity. If the ratio is higher, it means that the company has more debt than equity. Looking at ABBV, we can see that it has a 10-year average debt ratio of 2.7. That's a healthy debt ratio, but it doesn't meet my requirement of a debt to ratio of less than 1.5. What is the net profit margin? If I know the company's net profit margin, I can estimate its profitability. It is actually the percentage ratio between a net profit and sales. ABBV has a net profit margin of 17.6% on average over 10 years. This easily beats my target net profit margin of over 8%. This is a more accurate indicator than simply looking at earnings history. Because it is a percentage, I can use it for comparisons between other stocks. It is one of the key indicators for long-term investors. Dividend yield history. Since I'm also interested in dividends in stocks, I track over a 10-year horizon if the average dividend yield stays above 2%. As you can see on the ABBV chart and by my calculation, the average dividend yield is 3.79%. This is a nice number and meets my requirement. Note that I don't care about the current share price. As Warren Buffett says, as long as I buy well, I don't care about the stock.
The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. Yeah. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
How to calculate the average values of each parameter. I find an individual stock and data that is publicly available. I highlight them with my mouse and ask for the average value via ChatGPT. For example, I download ABBV stock data for the last 10 years and find that it has an average ROE of 135%. Similarly, I add all the data I have in the spreadsheet. Performance evaluation. When I look at the table, the only one of the parameters that is out of line is the debt to ratio. 2.7 is almost double what I'm asking for the stock. So would I choose to buy ABBV stock? Probably yes, because of the other parameters are above standard. To get a better idea of parameters set, I will add to the table the data from the other two healthcare stocks. Eli Lilly LLY, like ABBV, has a high debt to ratio, but the other parameters are satisfactory. Also an interesting stock to invest in. To check, I'll add Abbott Laboratories ABT, which no longer has a debt to ratio problem, but instead has a low ROE and a low dividend yield. Here I would already pay attention and look deeper into the individual parameters. Is my list of fundamentals the only possible option? Of course it isn't. However, I do find in it the advantage of a quick orientation among the sea of information that is pouring in on the average investor from all sides. One says you should watch the EPS ratio. The other says no, the most important thing is to watch earnings. Each has different parameters for stock selection and different things have worked for them. So you can take inspiration from my video and my approach and feel free to modify or add to it. Thanks for watching to the end of the video. I hope it gave you new insights in investing. If you enjoyed the video, give it a like and click subscribe so you don't miss my other videos. I will look forward to seeing you next time. Have fun and invest wisely.